Guys, welcome back. In today's video, we are talking about the return of Roaring Kitty, swaps being exposed, shorts liquidating, and many more in this video. First, we're taking a look at this. So Roaring Kitty has came back to Twitter with this particular picture. Now, so far, all we got is obviously time, a screen, and it says 109 is out of 420. So Josh Dario has actually talked about this and talking about deciphered Roaring Kitty's message because he's calling out the CSGME swaps BS. So if you can see here, the 9th of January 2021 was when Ortex started to breach swap risk limit with CS. And you can see this in this particular picture where we're obviously looking at the date. And then the 20th of April was when CS declared they cover most of the exposure against those swaps. But we knew that obviously it had a much bigger effect and how it obviously bankrupted Credit Suisse and how it's affecting UBS. Now, the dates are obviously giving here 9th of January, so you guys can see here 0901, and obviously 20th of April, the 2004. And so this is what we could be seeing. Now, obviously everyone knows Roaring Kitty is extremely deeply involved with, of course, GME, in the sense that everyone obviously knows in terms of the positions he took up on GME. So it wouldn't be a surprise to know that he's actually talking about these particular swaps. We've seen in the past how he's obviously tried to give some clues. You know, we've seen with the message with Chewy and how after uploading those pictures, we saw how he was no longer, you know, owning any shares of Chewy. And so this could just be another thing. Now, the reason why this is important is because we understand what these swaps have obviously done. We know that these swaps is still eating into the short sellers. Ortex blew up with the swaps, and then the Credit Suisse blew up with the swaps. We know that with the GME, the AMC swaps. It was then obviously carried over into UBS, and we know that UBS is not in a good position right now. So if he is talking about these swaps, it could very likely be what we're going to be seeing is how UBS, the holder of these swaps, are very likely to be seeing some major things happening, whether it's going to be a government bailout, whether it's going to be a bankruptcy, whether it's going to be the cover of these swaps. You know, what we're likely to be looking at is, of course, more and more things that will be targeting the short sellers. And you can see how this is having an effect. So can't stop, won't stop, GameStop, all way, it just got halted. So we can see as GameStop was up and it was actually faced with another halt. Now, clearly, you know, this was something that was going on. Now, I want to talk about this halt because there is many reasons that we can see from this, many indications. The very fact they are halting GME when any sort of volatility is happening is clear transparency and clear indication that shorts are still in this play, because the very fact they are not allowing AMC to go up either, and we can see here it was only up 5% before it was halted. The very fact we are not allowing AMC to go up or GME to go up is because they don't want any short sellers to obviously get margin called. They don't want them to be covering these liquidations, because what it will do is that the institutions that are involved, with the banks that are loaning money, banks that are actually shorting GME, AMC, the hedge funds that are shorting these shares, will all go bankrupt if they have to cover for the squeeze. But the very fact we are seeing this hold shows that they're obviously still trapped in this play. And you can also see AMC moving right along with GameStop in a heavily shorted equity basket of securities. So you can see GameStop was, AMC was up 5.91%, or at least close in the market at plus 5.91%. It actually went to the high of 556 today. So we saw that volatility coming in. Now, I wanted to obviously talk more about this in the sense that any volatility that we see in AMC right now is obviously got to do with the return of Roaring Kitty. But what we also have to understand is that you can't mix it just with that. We have to understand AMC has released fundamentals recently. We've seen how the box office is recovering. We know that naturally there will be people buying into AMC anyway, just because they understand the investment thesis behind this. And so it's to understand that the potential for investments is still there. And so whilst there is, of course, volatility because of, you know, other sentimental factors, we have to understand that there are people buying into AMC because of the fundamental factors that we have covered in the past. Now, another thing, and just to understand how shorts are obviously worried, and again, they don't want to be liquidated, is Revolut halted almost all heavily shorted stocks like AMC, GME, and Tesla with no reasons of volatility. It looks like someone's being liquidated or investigated. where we can see AMC, of course, being halted. And now we already talked about GME being halted, and this isn't on all brokers, this is of course on Revolut, but it's the very fact that we are talking about this is that understand anytime we see any sort of volatility, you instantly see these regulations put into place where the sole purpose of it is to limit the upward pressure of these stocks. And again, why would you limit upward pressure if you're not trying to protect people who will be damaged by this price of these stocks going up? And so in this case, we know that of course companies like Citadel, like Virtue, are heavily invested in their short positions with AMC and GME. And so anytime we see any upward pressure, it would mean that they're taking massive losses in their P&L. Now, obviously, the reasons they want to protect, these firms is because firstly, Citadel, Virtue, they're market makers in the game. But secondly, we also know that, again, in this example, Citadel, their prime lender is, of course, Bank of America. And so if Citadel were to take a massive hit because of these AMC and GME positions, so would Bank of America. And we've already seen with how Warren Buffett is selling his Bank of America shares, with how the fundamentals of Bank of America is doing, they're already not in a good position. And that's why we see these holds. That's why when we talk about the regulations that are put into place to quote unquote supposedly protect retail investors are actually put in place because they want to protect the institutions. And it's why this whole thing has been going on for 3-4 years now, because anytime we see, the real price discovery come out for AMC, for GME, we are instantly met with regulations that are put in place to actually limit these movements. Another thing that I want to talk about is the massive GME orders on the whale feed right before Roaring Kitty came back, and so 61 million shares of roughly $1.7 million. Now, the thing that's interesting about this is because already in the past, we saw the 5,000 options, the block of 5,000 options coming in, and we talked about how that is the return of Roaring Kitty. We talked about how he profited from his Chewy positions, and it's very likely that he's shifting the capital and the profits from Chewy back into GME. And now what we're seeing is these capital coming in. Now, could this be some sort of insider play? We don't know, but what we are seeing, of course, is more and more pressure, more and more volume coming in for AMC, coming in for GME. And we've seen this already. We've seen this even before the tweets. We've seen this when AMC was obviously at the lows, before fundamentals, after fundamentals. We know that there are people piling in, and that's why I said I want to make sure that everyone understand, whilst there are some sentimental factors that's causing the price to go up, it doesn't take away from the fact that people are just wanting to invest into AMC. As always, know this is financial advice, so do take out a so make sure to do your own due diligence and research. Another thing to focus on is the reverse repo. What we're seeing is a reverse repo to be at $131 billion. Now, like we talked about, what we want to see is the reverse repo inevitably obviously go to zero, because that means that the shorts will be faced with a massive liquidity problem. What we are seeing right now, it's going down, and that itself is already showing how some short sellers out there are already struggling with capital, are struggling with liquidity. And this could explain why anytime we see the pressure coming in, we're seeing these halts happen, we're seeing limitations towards the bullish pressure there is for these stocks, because they are lacking on liquidity. We've seen with many other economic factors that, again, they are not in a good position. Whilst we are seeing all these, the markets going up, they're taking these collaterals, we understand that the financials of these firms are actually not in a good place. And so this is exactly what we need to see. And it's how we understand that the short thesis is, dead, because they can't short AMC because of the fundamentals, but why the short squeeze play is alive because the liquidity of these firms are going down and down. And you can see CTB is dropping just like number of shares available to short, a remarkable combo, suggesting the risk of shorting AMC is quickly rising. Nevertheless, SI is big, and those stuck in their open short positions are left to their fate, thrown to their apes, a dire fate. Now, something that we've covered on this channel multiple times is understanding the position between retail investors and short sellers, and what the advantage for us is. Now, I've talked about this multiple times, but I want to quickly cover it. It's essentially understanding that anyone who's bought into AMC shares, it doesn't cost them any more money apart from the money they spent to buy the AMC shares. And if we ever get to the state of dividends, it will actually bring us money as we hold on to our AMC shares. But for the short sellers, it's costing them money every single day because they need to finance their existing short positions. Not only that, they want to make sure the price is suppressed, so they're spending more money to create new synthetics. And so we're in a position where for us, the holders, it doesn't cost us any money. But for the short sellers, they're spending money every single day. And that's going to eat up into the liquidity. That's going to eat up into the capital. And it's what we talked about here. As we see the reverse repo go to zero, we're going to be seeing the lackness of margin and capital from the short sellers. You guys, thanks for watching. I'll catch you guys next time.